Welcome to another edition of Southbank Investment Bulletin. So, I saw this article today talking about UK basically rations on some essential salad ingredients, and there's a lot of finger pointing going on, whether Brexit's being blamed because uh, the shippers or the truck companies can't be sure what they're going to be able to send back into Europe and what kind of tariffs they might accumulate when they arrive, so they're not sending stuff north either. But then there's the additional point that Morocco, which is a major producer of various different vegetables and fruit, has stopped exporting tomatoes and a couple of other major salad ingredients. And of course, it's not just salad. I mean, tomatoes go into absolutely everything. So when we then think about what's going on here, well, I think that rather than think about the repercussions potentially of climate change or because of politics, maybe we should just simply think about the fact that it takes time to grow crops. And 6 months ago, we had some of the most uncertain periods of energy security ever. So we've seen let's just put that into context because natural gas prices have absolutely collapsed in Europe. And at the in the third quarter of 2022, prices were north of 300, and now they're down around 56. Now, when one thinks about the fact that a lot of the shortages right now are due to uh, the kinds of crops that are grown in greenhouses, well, I think we can squarely lay the blame at high energy prices impacting the ability of greenhouses to actually keep up. Well, then I was thinking that perhaps we might have seen some additional interest in vertical farms. And I looked at quite a significant number of these types of companies prior to recording this broadcast. And what I was most especially struck by is the complete inactivity, that they haven't moved at all. So we're definitely not yet in a position where uh, you have investment money coming in and really wishing to invest in alternatives. That definitely suggests to me then that this is not so much about an absence of supply, but rather political factors and geopolitical factors that are impacting the availability of key commodity ingredients in the short term. Now, when we think about how is the UK economy doing, there are two ways of looking at it. Uh, the first, I think, is the pound. And the pound has been going sideways for 3 months. So, to me at least, that suggests that the economy isn't enduring a lot of fright. Now, we've had a great deal of volatility in the currency over the last couple of years, and there was an awfully big decline in 2022. And we've had then a really impressive rebound in the last quarter. And now we're pretty much mid-range, or I guess right in the middle of the size of the ultimate decline and at the lower side of the range that formed between 2016 and 2022. So we're at this indecision point and testing the region of the 200-day moving average. So that tells me at least that the UK economy is stable. But then we can also look at the very significant outperformance of the FTSE 100, which popped to a new all-time high this week and then paused a little. And I think that considering this really impressive run-up that we've had over the last couple of days, then it's probably quite likely that we're going to get at least some pause and consolidation. I think that it's also, I think, would be remiss of me not to talk a little bit about artificial intelligence. And There's a huge amount of excitement going on right now about artificial intelligence, and that has certainly helped to stoke interest in stocks like Nvidia. So, as a leading producer of graphics chips and the kinds of chips that would go into artificial intelligence engines, then the stock is rebounding better than just about every other one of the chip manufacturing companies. But they have all at least given some tentative evidence of support coming back in. So Taiwan Semiconductor has also bounced from the region of the 200-day moving average, and then so has ASML. So investors appear to be willing to give the benefit of the doubt to the possibility, at least, that artificial intelligence is something that will help to propel profits for the technology companies in the future. But then the question, of course, is how likely is that? And I think that we'll probably see prices go up first, down afterwards before we get an actual answer. But I think what the biggest impact of artificial intelligence will be is to commoditize first order thinking. And by first order thinking, it would be simply to verbally repeat whatever one finds on Google. But I think it will then ultimately enhance the value of second order thinking, which is that I read something on Google and then I draw my own conclusion. And that is obviously a something that analysis is very important about. That's basically what an analyst's job is. But too many people simply repeat what they've read somewhere else rather than draw a novel conclusion. And I suspect that that's where the artificial intelligence niche will be. Now, of course, we're still in an environment where there's an uncertainty about interest rates, and 10-year gilts our gilt yields are still hovering here around 3.5%. They have not quite yet broken through to a new recovery high, but I think that it is more than likely that we're going to see additional interest rate hikes by the Bank of England. They really do want to get the cost of they really do want to get inflation under control. Now, the cost of servicing that debt is something that they also have to bear in mind. And that basically means that they have to get inflation under control, or then the cost of servicing the national debt would get out of control. Now, that is less of an issue for the UK because the duration or the average duration of the government debt is quite lengthy. It's in excess of a decade. It's much more urgent for countries like the USA, where there's a profoundly large quantity of debt that has to be refinanced in a reasonably short period of time. And then I think it's important to just keep an eye on the copper price. There's this enormous, I think, discussion going on right now about how are we going to completely remake the global economy? Are we going to have renewable energy everywhere? Or how is that all going to happen? Well, copper is a really significant component of every kind of renewable energy. And the price has been trending higher since the late period of September. And now it's coming back to test the $4 area. And this is also the upper side of the underlying trading range. So if the most bullish forecasts are going to be delivered upon, then we're going to see copper finding support pretty quick. But the other point, of course, is that copper is often regarded as a barometer of economic activity globally. And therefore, it's also very dependent on how economies around the world hold up. And most particularly China, because China has been the demand growth driver for copper. In fact, total global consumption of copper ex China has declined over the last decade. all of the demand growth has come from China. So what happens in China is going to have a really significant knock-on effect for the price of the metal. And I think it's really quite important to highlight that the Chinext index, which is the kind of newer technology companies in China, is trading back below its 200-day and 1,000-day moving averages. So there's certainly an incentive here to look at what's happening in China and not simply assume that everything is going to be hunky-dory and that there's going to be a huge jump in domestic demand for all sorts of goods and services now that the COVID panic is over. In fact, because China did not send the same quantity of money out into the pockets of consumers that the USA did, then there may not be a sufficiently large quantity of cash sitting on the sideline waiting to invest, like in China, compared to what we had in the USA. Well, if that is in fact the case, we can then anticipate that the potential is real that we're going to have a more volatile period overall within the commodity complex. And I think that I'll leave you for this week and wish all the best to all of you.